into the real sector, and that underscores the issue we were talking about earlier, that when you actually look at the effective cash reserve ratio, it is in the 30% range, it's not 22.5. And I think that's where CBN can actually do more, and that's really within the purview of the CBN and not the MPC, not the committee itself, to do more to actually see how to bring more liquidity for banks to be able to lend to the real sector.
Right, Mr. Yusuf, you're a business person. I'm sure you're not happy with the decisions you heard.
Well, I'm not quite happy, but it didn't come as a surprise. This is what I expected, knowing the disposition of the Central Bank of Nigeria.
Already.
But what is expected is different from what is desirable. What is desirable is for the monetary policy to be more sensitive to the real economy. I haven't seen that. Because if we are talking about dealing with issues of unemployment, if we are talking about building an inclusive economy, if we are talking about driving growth through small businesses, this policy framework is not likely to deliver much in that respect. And I'm also worried about the fact that there seems to be a gradual collapse of financial intermediation. Because the whole essence of a banking system is to drive resources from the surplus end of the economy to the deficit end of the economy. That is not happening. The resources are not going to investors. The resources are either going to financial instruments, financial markets, or to government. That will not help the economy. And as I said earlier, what can drive this economy out of the current challenges is private sector investment. I'll give you an example. Last year, a year of recession, ATM withdrawals alone was 6 trillion. That is almost matching even the budget of the federal government. Electronic payment was 38 trillion. This shows you the kind of potentials that exist outside of government. And if you really want to transform this economy, you should be looking at how we can activate more activities in that private sector space. Right now, the monetary policy disposition is not giving that kind of signal to me.
Well, just before we round off this program, Dr. Dedibe, looking into 2018, what does the outlook look like for monetary policy environment, particularly as we have a new set of MPC members coming in 2018? What are we expecting to see? Hawkish or dovish people there?
Well, I would say dovish, and for obvious reasons. Yes, we may likely see rates moderate, but I still don't forecast single-digit interest rates. I see it still double-digit.
Like the CBN.
And it's a combination of two things. One is the disposition of the Monetary Policy Committee, which is based on global environment vis-a-vis the risks in the domestic market. But I also look at the other side to it, that when an economy is recovering, you are in growth. And any time you grow an economy, there is always inflationary pressures to contend with. That will help to sustain interest rates at double digits.
All right. Actually, what do you see in 2018? Just a quick one.
A quick one? Well, it depends on how diligent they are and able to implement the rest of 2017 budget and get the 2018 budget passed on time. But already 2018 budget has a 2.6 trillion naira deficit, and most of it is going to be funded from the real sector. Now, without growth in the real sector, I doubt that budget then starts looking difficult. You see oil revenue of about 2.4 trillion and non-oil revenue component in the budget is about 4.1 trillion. In that 4.1 trillion, that is where we have a problem, because you see something like, non-oil revenue for, these receipts, tax receipts from private sector. At 1.4 trillion, I don't see how they can make it. And those can then present challenges for the monetary policy environment. And those challenges might be that we're here again thinking about how to manage inflation, how to maintain a fragile recovery, because we've not found a way to drive growth. Driving growth needs to start with some of the simple structural things that CBN has at its disposal today, and they can actually start tomorrow on those ones.
All right, Mr. Yusuf, in just a few seconds, what do you see in 2018 as regards the monetary policy environment?
Well, I don't foresee any major changes in the environment for as long as we have the current structure that we have in the central bank. Again, 2018 will be moving close to election. So there's going to be a lot of movement around the elections, and that will also take its toll on both monetary policy, fiscal policy, and all of that. A lot of distraction will happen. So I don't foresee any major, unless the fundamentals change, like the oil price or things like that. If there's a major, then we can see something much more positive.
All right, thank you very much, Mr. Muda Yusuf, Director General, Lagos Chamber of Commerce and Industry, and of course, Dr. Biodo Adedipe, an economist, and partner B. Adedipe and Associates. And sitting beside me, Ike Chuke, the GMD Afrinvest.
Thank you.
West Africa. Thank you, gentlemen, for coming on the show.
Thank you, Sir.
And that's a wrap on the program. Thank you very much for being part of it. I'm Chimezie Obi Iwagu.